Good morning. Can we please settle down? Good morning once again, everyone. Can we please settle down? The event is starting now. Good morning once again. My name is Omolabake Sulaimon, a solicitor here at Detail Commercial Solicitors, and I welcome you all to today's event, the Detail Business Series, the Real Estate Business Series, themed Nigerian Real Estate Outlook. What next, who next, and where next? Before we proceed with the business of today, just a little bit of housekeeping. If you need to use the restroom is just at the back of the room. If you have any questions or requests, kindly reach out to the members of the detail team standing at the back of the room. And I would like to implore everyone to please keep our devices mute so we can enjoy today's events without any distractions. Um, Once again, welcome to today's event. Without any further ado, join me as I welcome Temidayo Ajayi, the managing partner of Detail Commercial Solicitors, for the welcome speech. A round of applause, please.
Morning, everyone. Um, It is a pleasure to host you this morning. I just thought that I would use this opportunity to tell you a little bit about Detail. We're a non-courtroom firm, which means that we do not go to court at all. And so essentially, it means that we have enough time to focus on your business and on whatever objectives you intend to achieve. We typically have a business series to speak about, issues that are going on in Nigeria, things that are trending and hot topics, and it spans across our different practice areas. So I officially welcome you to our real estate business series, and we hope that we would have engaging conversations based off of, discussions from the panels and presentations being made by our keynote speaker. So please feel free, relax, ask questions. We want this to be engaging. And we would say also use the opportunity to network. Thank you so much for coming. Thank you so much for honoring our invitation, and have a great day.
Hello.
Thank you once again, everyone. So to set the tone for today's event, we'll be calling on the keynote speaker, Mr. Deji Ali. So I'll be reading his bio now. Mr. Deji Ali is a distinguished Nigerian entrepreneur and financial services executive with a legacy of innovation in finance and real estate. He founded Asset and Resource Management Company, ARM, in 1994, leading it to become one of Nigeria's foremost financial institutions. As CEO of Mixta Real Estate PLC, he has spearheaded transformative real estate projects across Africa, including the Lakwa Lakes Golf and Country Estate. Deji's career spans roles at Prudential Portfolio Managers UK and the African Development Bank. A recipient of Nigeria's Officer of the Order of the Federal Republic, OFR honor, he also fosters entrepreneurship through the Deji Ali ARM Young Talent Award. He holds degrees in accounting and finance from the University of Lagos. A round of applause for Mr. Deji Ali as he comes up.
Well, thank you very much for that introduction. Good morning, everyone. My inclination yesterday was to call Ayole and Olaomi that I wouldn't be able to make today. But the problem with planning things in an orderly manner is that it ambushes you, and you're minded to consider the effort that has gone into planning this. And for reasons that you would understand, I shouldn't really be here, but I've chosen to do so. And I thank you very much for the invitation. So there's something I call the immigration test. Anytime I'm traveling, and there's that form that we used to fill, and it says profession. I'm never able to say real estate developer because I don't see myself as such. My career was in finance, specifically in asset management. And I ended up in real estate accidentally because we were trying to design a product for our asset management clients. As good fortune will have it, that business grew beyond what we contemplated. We raised so much money, and when it came down to it, we struggled to give our clients money to developers. And by default, we became a developer as well. But that business didn't sit too well in a financial service firm. So after several years, we spun that off is what has metamorphosed into what we call Mixed Africa, which has operations in about 8 countries on the continent. It's an interesting topic, and what I plan to do in the few things that I would share with you today is to focus on an area. You know, there are times when we discuss things intelligently, but at the end of the day, in ways that are not really relevant to the issues. And what I'm trying to say here is that in trying to say a few things on this subject, I will focus only on a segment of the real estate market. The reason being that you need to understand the scale of the problem we have in housing, and you need to understand where potentially the latent demand lies. And so if you feel that the demand or the potential is occupied by 90% of the population, it's almost irrelevant spending time discussing projects that people describe as meant for 1% of the 1%. So the focus of my discussion today will be on the affordable housing market, looking at low to middle income. Why? Nigeria is, alongside India, accounts for the largest housing deficit in the world. Nigeria, with over 20 million, has the largest housing deficit in Africa. And I think that the foundation for a sustainable housing sector is the base. Low-cost, affordable housing. If you cannot solve that problem, you can't really dimension the real estate market by trying to build a pyramid from the top. We have to solidify that base, because that base is what gives impetus for the sustainability and the growth across other segments of the housing sector. So, never mind. Some of the things I would share with you, depending on your perspective, may make sense. To others, it may not make sense. It's not a case of right or wrong. It's just a matter of the perspective that I'm bringing into this discussion. So, I think we must therefore ask the question, what sort of society are we trying to build? What sort of market do we want to see in housing? Are we trying to build houses for profits or to build a society? But let me offer some very early conclusions very quickly. And I think this shaped my career at a very early stage. One of the sectors, as a young portfolio manager in England then, was one of the sectors I said, well, I was really not interested in, alongside agric, was real estate, funny enough. And I think that my experience in the last few decades have solidified that my cynical approach wasn't unfounded. I think the real estate development, especially if you're looking at it at scale, which is what we need in the case of Nigeria, given the size of the deficit we're talking about, is an extremely tough business, extremely tough. And I've said that if you look at it, 2 of the fundamental necessities of the human being, which is food and shelter, are embedded within 2 most complex sectors, especially if you're trying to run a business. That's agriculture and real estate. So at a glance, you may assume that because this industry serves essential human needs, success will be assured. But typically that's not the case. You'll find that globally, institutions that have gone out to do large-scale real estate developments solely in the private sector end up not completing those projects and are built out, and other people reap the rewards. And I think that makes it even more complex in a country like Nigeria and emerging markets in general. So the fact that we are talking about real estate, we're talking about shelter, the fact that when you talk about the Maslow's laws is one of the defined necessities that you see, it doesn't shield you from business failures. If anything, if you've had conversation with a bank and you're talking of financing real estate, you understand the cynicism that bankers take into appraising real estate projects. So extremely tough business to be in. So against this, what you may call not so optimistic background, the following, I would say, is noteworthy. Nigeria has a single housing deficit, as I've said, the largest in Africa. Globally, it is a huge number, 20 million. There are fewer than 3 countries in the world that have this kind of housing deficit we're talking about when you compare to Nigeria and also India. Yet, the real estate sector in Nigeria is highly fragmented. Everybody here has a brother, sister, uncle that is a real estate developer. It's even probably a side hobby for some of you. That's the level of fragmentation that I'm talking about. And so when you're trying to have a serious discussion about housing, you take the deficit, you look at the manner in which the sector is structured, you know that we're not addressing the problem, and we need something seismic to happen in that sector. And that's what I really want to speak to. So conclusively, you say that a small-scale approach is incapable of solving our problem in Nigeria, is a cottage industry solution to addressing a very serious problem. The fact that we all have brothers or uncles who are successful real estate developers because they do a block of 10 apartments does not speak to the larger problem or the extent of the opportunity that Nigeria offers. While the premium markets in Ikoyi and Victoria Island and Abuja are important, they're talked about, and I think many of us have heard stories about that. For me, it's irrelevant in the scheme of things because, as I said, you look at some of the adverts that tell you they're building for the 1% of the 1%. So I wouldn't spend my time or belabor time discussing that because it's really irrelevant in the scheme of things. A high-ranking government official a few years back said, there's really no deficit in housing in Nigeria. And he was making reference to the 27 million deficit that you have, that people are banning around. And he gave the example. He said, if you look at Abuja, most of the houses are vacant, and therefore, as far as this is concerned, there is really no deficit. I thought it was an interesting way to explain a very serious problem. Now, it took EFCC coming out to announce that, this estate that has 250 units is actually owned by one person, So you can understand that when you have unaccountable wealth, you're happy to invest in real estate, and you don't really care whether they're rented out or not because it's a way of storing capital for the days ahead. But the reality is that when you look at statistics in any gathering, it's undeniable that we have housing deficit in Nigeria, and it is a problem that we must solve. But what are the problems? Why do we have this situation in Nigeria? I'll just very quickly run through some of them. High capital requirements, cost a lot of money to do development. The payback period is very long, and I'll explain why, because there's a context to that. Most developers rely heavily on debt because we live in an environment in a country where risk capital, that is equity, is not really available. The regulatory issues, in a state like Lagos, it is a problem. Market cycles can be too short. And what do I really mean by that? A typical development would probably take you between 2 and 3 years to complete if you have the funding in place, all right? Now, you can say that's a short term. But what I try to do in trying to explain this point is to go back about 30 years in Nigeria and to break those 30 years into decades. So starting from 1995, all right? Now, what you find, and contextualize this against what I said, that a typical development takes 3 years. Some take 10 years, but let's just look at an average of 3 years. The point I'm trying to make is that if you look at the last 3 decades, and you look at them in decades, isolate them. Each decade offered an average of 4 to 5 economic shocks, all right? Which means that you have disruptions in those decades that make real estate very difficult. Now, if you look at this last decade, up to 2024, which is the most severe of the last 3 decades we've had, the combination of issues that we've had to deal with in a country like Nigeria makes it extremely difficult for real estate to be a viable business proposition. It's just very, very difficult. And if you go back from the recession to the forex shortage, you look at the valuation of a currency, you look at high inflation, global inflation as well, before you even look at it, high building material cost. It just makes it very difficult to do this sort of business in a very viable way. Yet, we must find a solution to it. Other problems that you have, of course, land acquisition. Only yesterday, I counted an issue that if you're a large-scale developer, you understand the complexities around land banking and management of a large land bank. Infrastructure deficit is a big issue. Hopefully, we'll speak to that at some point. And then you have, the industry dynamics itself, peculiarities of your suppliers and contractors. The developer is the last in line because you have people who supply doors, iron rod, and so on and so forth. They ask for 70% upfront. You give them 70% upfront. That's your money, which they use to procure what you need, and then you pay them 30%, which is probably their profit at the end of the day. And then you are waiting at the end of the development in the hope that you make some money. And that is part of what makes this business very difficult. But most importantly, mortgages. I think if you look at the data as a percentage of GDP, in the US it's about 49%. In South Africa it's about 17%. Anybody has an idea what it is in Nigeria? It's less than 1%. So it gives you an idea that even if houses are cheap, it doesn't mean effective demand will be strong, because you need credit to fuel that demand and to convert that into real demand for people. So it's a big problem. But how do we move forward? I think that's really the issue. We know we're experts at discussing our problems, and we need to think about how to solve this problem. And we've been working with the government. I've tried to work with successive governments to find solutions. We worked on what's mentioned first into the Family Homes Fund, and now the Murphy Real Estate Investment Fund. And the whole idea is to find solutions to the demand side of the housing market, because really there's no sector, there's no real estate development to discuss that would stand a chance of solving Nigeria's problem unless you address the issue of credit on the demand side. So we need to focus on how to do that. We need to focus on large addressable markets. Like I said, for the low to middle income, I think that's where it starts. And I've used the example of if you're trying to build a pyramid, you can't start at the top. You need to start at the base. And I'm not saying that the role of small-scale developers is not important. It's important. They bring craftsmanship and flexibility to the trade, whilst the large-scale developers bring scale and efficiency. So you need to really see that both serve a purpose, but just one will solve the problem a lot better than the other. So ultimately, it's about what I call the first-time buyers market. First-time buyers market. And I wonder, in your firm, how many of your young people actually own their homes already? My first mortgage was at the age of 23, but that was because it wasn't in Nigeria. And that's what you have in other countries. It's what we've seen in Morocco. In 2010, we're part of that whole revolution to address the housing shortage in Morocco. And we played a key role in the northern part of the Tangier region, where we delivered quite a number of homes, because the government took a position that home ownership was something they wanted to address. And they ran a scheme that enabled developers like ourselves to participate in that whole process. But why is this first-time buyers market very important beyond what I've said? I said it's a pillar for market sustainability. is the foundation of property market pyramid, and it unlocks mobility because you buy your first home and then you move on to other things, and it creates a lot of fluidity in the market. So it's very good, stimulates construction industry, and contributes meaningfully to economic growth. These are things that we tell government that the multiplier effect of this, if you take this sector seriously, would begin to address some of the wealth gap problems that you have in the country. Because everybody, by the time you're 30, you should be well entrenched in your, especially if you're educated, in your first home. So, and I think government gets it. But there's always an issue of how do we solve this problem? And I think the responsibility that we have in the private sector is not just to offer solutions without making ourselves available to implement for government, because there's capacity that's lacking, both in the private and the public sectors, but more in the public sector. And I think when you're prepared to do that, you'll find that most of the time, people in government are willing to listen, and that's the approach that we've taken. So, but let's look at it. How is Nigeria responding to this problem of housing? If you ask someone who is interested in a home acquisition, what factors are inhibiting him or her from making an acquisition, they'll say, well, it's expensive. That's the first thing you hear. And then some people will analyze it and say, well, there's no credit, all right? The absence of credit makes everything look expensive. Isn't that the case? If there's no credit in the US or in the UK, home ownership will not be at the rate that you have it today. If you ask a developer, on the other hand, it will describe its core challenge as lack of funding for project advancement. Now, looks like it makes sense, but in reality, the way capital formation works is that if your sector has a bright opportunity and you have a viable business proposition, money will find its way to you. And the reason developers don't find money easily, or banks are reluctant to lend, is because they know that when you build those homes, you don't have ready buyers to take them on by paying. So, which is why, very strange way, when you go to a bank and you say you want to do a project, you say, okay, give me your off-takers list. So if I have that, why would I look for the money? So the different perspectives that come into it. So all developers have access. If all developers have access to funding, then we'll all sell properties, won't we? But I think, fortunately for us, there's a big game changer in Nigeria today. And it's called the Murphy Real Estate Investment Fund. We had the opportunity of working on that. And I don't think that people understand the significance of what just happened in housing. That this is going to revolutionize housing to the point where we'll be back to the experience of our parents in the late 60s and 70s, where as a young graduate, if you have a stable job, you can apply for a mortgage and pay over a 20-year period. But the first thing that comes to mind is that market rates are about 29%, 30%. If you want to borrow today, I think we'll be lucky as individuals to get a loan below 30%. So what government has done this time around, recognizing that this has been structured in such a way that although government is going to champion this, but it's going to be managed by the private sector. They have replicated exactly what you have in the pension industry and provided the catalyst of seed capital. The first 150 billion, which has been funded on behalf of government, will only attract 1% return to government at the very most, 1%. So what the Murphy scheme is essentially going to do is to blend commercial rates from the private sector with that subsidized funding so that Murphy Real Estate Investment Fund can lend to borrowers at no more than 12%. All right. So the ceiling has been set at 12%. as market rates decline in the coming years, you should expect that 12% to decline to single digits. Now, when we sell homes in Nigeria, which is the only country where interest rate is above 10%, mortgage rates above 10% in all the countries that we operate in, we have what we call a long-term payment plan. And that long-term payment plan is that, okay, you start off by giving us 25%, then you pay the balance over 18 months. That's long-term. That's how. And because of that, it imposes limitations in terms of the number of people that you can actually sell homes to. So the reason why I'm saying this is a big game changer that we need to pay attention to is that for the first time in a very long time, if you're young enough, you can borrow for 20 years, 25 years, 30 years at subsidized rates. And that makes homeownership a lot more real. But let me also be realistic and analyze it further, because something fundamental has happened in Nigeria that we shouldn't lose touch of. Just before COVID, we did what we call very low-cost housing, where we sold apartments at about 9.9 million naira each. 9.9 million naira. Now, today, for us to deliver that same product to the market, it would need to sell for 45 million naira. So what has happened? Costs have risen. And I'm sure that unless you're in a very favorable sector, your income hasn't risen in line with cost. So that gap has widened. I thought I would use statistics to give you a better appreciation, because when you use numbers, you can understand. So I've been around long enough so I can share some data on motor vehicles. So in 1981, the annual new vehicles imported into Nigeria, the annual new, not talking about brand new vehicles imported into Nigeria, was 253,000 every year. By 1987, it had declined to 10,000. Why? Because of the consequences of SAP and all those things and the attendant problems that came with it. So what's that telling you? Income. People's income have been debased to the point where Tokubo, I mean, when I got my first car in university, there was no, Tokubo was not in our lexicon, but now Tokubo came into it, and then, now, so 1987, it came down to 10. By 2010, it shot up to 40. So understand what's going on there. When your income drops and costs have risen sharply, it takes time for you to close that gap. So if you look at what has happened to Nigeria in the last few years or so, if you're optimistic, you should expect a realignment to take place in 5 years' time. If you're an unfavorable sector of the economy, it could take about 10 years. Because, I don't know how Detail is doing it, but, maybe you've quadrupled salaries. We haven't been able to do that, and it's just going to take a very long time. So what is the point I'm trying to make? It is unfortunate that at a time when this product has come to the market to make housing affordable for people, we've suffered the consequence of global inflation. So even though you're being offered something that you should celebrate, the challenge is going to be there for many of us, because if you take out a 50 million naira mortgage today, over a 20-year period, then your monthly outflow has to be 550,000 naira, which means that your net income for the year has to be around 20 million. So that's a challenge. But this opportunity is still there. What it just means is that the addressable market has now shrunk. Maybe instead of 25 million people being able to benefit from this because of what has happened, this is now going to be a lower figure. So, but we need to find ways to make do with what we have, because it still represents an excellent opportunity. Because if this takes off, for developers, I think that essentially it means you can launch more products, sell more homes, and I think the beauty of the scheme is that it's available to every developer in the country. It's available to developers who have had problems with their development and can access this scheme to complete their project. So I think we need to look at that very seriously. So I think in the interim, federal government has made crucial move. Now it's for the states and also those of us in the private sector to act, to leverage this opportunity. Forward-looking states will create incentives for economic development by offering, all sorts of incentives. Maybe it's land. Infrastructure is still a big component of cost. That needs to be subsidized in one way or the other. And through mortgage availability, affordability hopefully will become less of an issue. So let me try and make some concluding remarks at this stage. I think that we'll never have a situation where all the ducks are well lined up. But what is undeniable is that we have an opportunity to build on a very weak, fragile industry. I think every developer that is prepared to be creative will see that there is a better opportunity to execute. I think that we can't all be building homes for people in Ikoyi and Victoria Island. For me, I'd rather sell pure water telephone than your iPhone because it speaks to a larger market, and I think it's essentially what we need to move the country forward. So as we look into the future of real estate in Nigeria, the truth that stands out is that no sector can scale sustainably if foundation is very weak, and I think our foundation is a very weak one. A thriving property market cannot rest solely on the promise of luxury towers or grand enclaves. It must be rooted in strong, inclusive base that serves everyday needs of our population. I think that's very important. So my submission really, bringing, because I think Olawumi has told me I only speak for 15 or 20 minutes or so, is that in dimensioning this industry, looking at this whole opportunity, let us look at it in terms of the segment of a population that really matters, the segment of a population which, if we address, would allow us to create bigger opportunities for second, third, fourth-time buyers of real estate. It's nice to talk about shopping malls, like those you have in the US and also, but for me as a developer, I'm more interested in doing those trading malls. I mean, that's why we did Oluwole, right at the center of the CBD, because the risk is lower, and I think that we're just not as wealthy as we think to be able to successfully manage Western-styled shopping malls. It's nice to have it, boosts the ego. But if your concern is about return on ego as opposed to return on equity, that's the way to go. But my position really is that if I'm given the choice between doing a Western-style shopping mall and one that is catering to the traders that you see that can be moved off the street and can pay you small amounts of money, number one, the return is a lot higher. Two, the risk is a lot lower. Three, the project duration is a lot shorter. So it just makes a lot of sense, And any day I wake up, I follow the money, not my ego. I think on that note, I'd like to take a pause here and thank you very much for listening.
Thank you very much, Mr. Ali, for that presentation. A round of applause for Mr. Ali once again. I believe that we would have questions from everything that was delivered this morning. I would just like to implore you to take note of your questions because we'll be taking questions after the panel session. Very quickly, we'll be moving to the panel session. On the panel, we have Mr. Deji Ali, who just delivered the presentation this morning. We have Mr. Odunayo Ojo. Please come on to the panel session. We have Mr. Mobolaji Adewumi. And the session will be moderated by our very own Olaomi Alade, the partner designate, leading the real estate practice at Detail Commercial Solicitors. We've met Mr. JJ Ali this morning, but quickly let's hear about the other panelists. Mr. Odunayo Ojo is a consummate real estate professional. Mr. Ojo has been involved in property development, asset management, private equity, and advisory services for various asset classes, including master planned communities, mixed-use schemes, shopping centers, commercial buildings, and hotels. He has held several roles, such as CEO of Alaro City, Director of Development and Project at Eagle Hills, Abu Dhabi, Development Director at Laurus Development Partners, Vice President at Ocean and Oil Holdings, and Business Manager at UPDC PLC. Mr. Ojo is a member of the Royal Institute of Chartered Surveyors, the Nigerian Institute of Estate Surveyors and Valuers, and a registered surveyor and valuer. He holds a master's degree in business administration and a bachelor's degree in estate management. A round of applause for Mr. Ojo. Mr. Mobolaji Adewumi is the Managing Director, CEO of Abe Mortgage Bank and a seasoned financial services professional with deep expertise across sub-Saharan Africa. He holds an MBA in finance from the University of Cambridge George Business School and a BSc in management and accounting from the Bafemi Awolowo University. A chartered accountant since 2007, Mr. Bolaji has held key roles at KPMG, UBA, African Finance Corporation, ASO Savings, and First Bank. He served as Group Executive Director of Finance at VFD before joining Abe Mortgage Bank in 2020, becoming CEO in April 2022. A distinguished leader in the industry, he is also a fellow of the prestigious Archbishop Tutu Fellowship Program. A round of applause for Mr. Adewumi. And finally, we have Olaomi Alade, a dedicated and resourceful legal expert specializing in real estate, corporate finance, and infrastructure law. As a partner designate at Detail Commercial Solicitors, she leads the firm's real estate and finance practice areas, providing strategic advisory services on high-value transactions. With a background in litigation and commercial law, she has played a key role in structuring commercial real estate and finance deals, including a 2.5 billion facility granted by Stanbic IBTC Bank. Known for her sharp legal acumen and commitment to excellence, Olaomi holds an LLB from Olabisi Onabanjo University and an LLM from the University of Lagos. She was called to the Nigerian bar in 2007. A round of applause for Olaomi.
Thank you so much, Lavake, for the introductions. Can you hear me? Okay. So thank you all so much, gentlemen, for being here. I know it's a great pleasure to have you here. Thank you for taking out time to be here. And all of your bios are so powerful, so I know that I have powerful men here. And thank you for being here once again. We'll dive straight right into it, and I would start with you, Mr. Odunayo. And my first question to you will be that, given the current economic realities, including exchange rate, volatility, inflation, interest rates, and all of that, how should real estate developers rethink their investment strategies in Nigeria? I know that Mr. Dwyer had spoken a bit to that during his speech, but I would like to hear your take on that.
Good morning, everyone. It's a pleasure to be here, and I would like to thank the detail team for inviting me to participate. So Mr. Dijali has painted a very good background to this conversation. He has also given us the context, which I think helps in putting some of our answers, into perspective. So right now, a lot of developers like ourselves are dealing with a very difficult situation, a combination of high inflation in Nigeria, high interest rates, and foreign exchange volatility. The challenge is that we don't produce a lot of the building materials that we use in the value chain of construction. So we are exposed to the vagaries of, the foreign exchange market. And that makes it very difficult to predict what your end cost would be. So in an ideal situation, you would be able to gauge what your margins would be. You'll be able to gauge what your profit would be at the beginning of every project, especially if you are planning to sell those units at a particular point in time. So given all these challenges, we've all had to adapt, to survive. As they say, it's a survival of the fittest type of scenario that we found ourselves. So, but to your question around what should developers do to survive this situation, we believe first and foremost, developers need to be more creative in the way in which products are introduced to the market and in which products are delivered to the market. First and foremost, gone are those days in which I believe the luxury end and the flamboyant types of developments would survive, given the challenges even within that market sphere. So I like what Mr. Jijali said around focusing on where the critical mass is. And I'm talking about critical mass of effective demand. So we as developers have had to focus on the critical mass of effective demand and providing products that are well suited to that market specifically. We've had to look more into middle income housing, which is the area where we believe there's the most effective demand. These are people who have jobs, who already have a cash flow that can sustain the kind of products that we're delivering to the market. They work in industries that still pay a living wage, the financial services industry, the telecoms industry, oil and gas. And just starting from there, that doesn't solve all the problem of the housing market, but that is an area where there's effective demand. Also, we believe very strongly that most developers should try as much as they can to avoid foreign exchange exposure, especially in terms of debt, because that is an area where your analysis can be blown out of proportion just by changes in the forex, especially if you are selling your products in naira. So there's definitely a mismatch between your income and the currency of your leverage. I believe very strongly that we need to all collaborate more than compete. So collaborating with other developers and collaborating with other players like contractors, suppliers and all that in the value chain can bring down your cost and reduce your risk as a developer. So such interesting financing models like joint ventures with landowners where you don't have to buy the land and then you guys share the risk and you put in your capital can greatly reduce the risk to developers. And lastly, procurement. I think we all need to rethink how we procure for this industry, given that, again, like I said, we don't produce a lot of the inputs. So procuring early, locking down prices, making sure that you don't expose yourself to changes in cost are all the ways I think developers can participate successfully at a time like this. Thank you.
Thank you so much, Mr. Adman. Thank you. It's dropped some lovely gems for us. I hope we're all taking notes, procurement, collaboration, and all of that. Thank you so much. That was beautiful. Over to you now, Mr. Bolaji Adeomi. My question to you is, how would you assess the current state of Nigeria's real estate in terms of accessibility, affordability, and investment potential, also taking into consideration everything Mr. Adwai has just said?
Okay, thank you. And thank you once again to the organizers of this event. I think it's a great opportunity to be here to engage with like-minded people in the industry. I think in terms of affordability, right? I think, like Mr. Dijali has previously mentioned, the industry is struggling with the issue of affordability. Most of the houses you have available, most of the off-takers cannot afford the units available. And I will go back to my experience a few years back. I had the opportunity of going for a training, I think second, third year into starting my work experience. And I was in South Africa, and pretty much everybody in that class were on the second and third year level in South Africa, Botswana. And when we were engaging, we found out that almost everybody already had a mortgage facility, and they were already staying in their own units, right? But as at that time, even probably up till now, most of my colleagues have not been able to afford their first home. So high interest rates is a contributing factor. Like Mr. Yo had also mentioned, you have issues with even the delivery price of those houses to the market. So it continues to be a struggle. Sorry, yeah, that's. Okay, for accessibility, it also remains a challenge. In terms of investment potentials, right? The investment potential still exists pretty much in the market. We in AMBI, for example, we've consistently supported developers in delivering houses, right? But even though there has been continuous rise in terms of prices, is there an opportunity to continue to play in that market? I think pretty much yes.
Thank you so much, Mr. Adeomi. Now to you, Mr. Dejali. I know that we've been speaking a bit to affordability, accessibility, and what the challenges are for developers. But I want to pivot a bit and let's talk about infrastructure. The absence of it or the availability of it, how does it influence real estate development? How does it influence pricing? I would like you to please share your experience with projects where infrastructure has either supported development or slowed it down, whatever your experience can be, and instances where your company has had to bear the cost of developing necessary infrastructure just for the sake of selling to your off-takers.
Okay, so first of all, I think infrastructure means different things to different developers. So what we do at Mixer is to build new communities, all right? The largest completed project, which is a single estate that has been done under the Mixer brand, is in Morocco, where there are about 5,000 homes. In Nigeria, we're doing something much bigger than that, all right? Now, I think the business model that we have is a very risky one. It's fraught with risk, you know. And the jury is always out, I'll be honest. And why is that so? I've talked about the capital formation weakness of Nigeria. To build a community of 10,000 people, families, requires you to spend a considerable sum of money upfront, all right? And there lies the risk, cost of capital, especially if you don't have patient capital, that is equity. And so we're faced with that challenge. But the converse of it is that, and I simplify it always when I explain to people, that if you live in a house that is well kept, and you're in a part of a house that is cleaned almost every 6 hours and is spotless, or you put a cube of sugar on the table, when you come back later on, you'll find that there are ants on that table. And that's the analogy that I draw between humans and infrastructure. And for us, you couldn't imagine that 10 years ago, anyone would want to go as far as Lakaway to spend money, that people would pay that kind of money for accommodation. So what we've seen is that if you can get your financing in place, and if you look at the trajectory, if you just take Ikoyi, Victoria Island, Lekki, all the way to Ekpe, and then you exclude maybe the free trade zone, you find that property values go down. But the benefit of infrastructure is seen, and when you get to Lakaway, that estate, it spikes. The price is about Lekki 1. And once you get out of that gate, it drops again. So what is the point I'm making? That infrastructure is something that people value, but it doesn't mean they can pay for it because it makes your product quite expensive. And that's the risk that we face with our business. But we are not a city developer. We don't do a block of 20 apartments in Yaba or in this. We do large-scale communities. So the jury is always out as to the sustainability of our business model, But because we have always had a patient owner in ARM, it's allowed us to manage those risks in a way. So I think people value infrastructure, especially, if you're in London or in New York, and you see a marketing material, it says, oh, City View, Lake View, but when we market here, we say good roads, drainage, because that's what sells real estate, and it tells you how important infrastructure is to people here. So that's the way I'll answer that question.
Thank you so much. That was a lot of truth. I want to come back to you, Mr. Adeomi, and now having talked about infrastructure, we've talked about mixed building communities and all of that, but Mr. Deji Ali had also mentioned in his speech the impact of the MOFI mortgage availability that the federal government has made available. I want you to please speak to how will this fund, the MOFI 250 billion naira real estate fund, how will it impact financing in the Nigerian real estate sector, and how can the sector participants take advantage of this initiative?
Okay, thank you. And I will just share our experience just from the mortgage banking perspective. The off-takers are there. But and there are a lot of people that need houses. You've heard Mr. Deji Ali refer to the housing deficit of circa about 27, 28 million people in Nigeria. So that means the market is there. But pretty much is when you approach a mortgage bank, first of all, very few people can drop the required cash to buy a house. So for housing and provision of housing to work, right, you need to have a viable credit system, right? But when we do our assessments and you get a manager in a bank, for example, and you sit down, you check the financials, pretty much, even though the earning might be able to support a 20-year, 30-year mortgage. As a financial institution, you can't afford to do that 20-year mortgage. First of all is the mismatch of funds. You have short-term funds. You've taken deposit liability for 3 months, 9 months, 1 year. If you're lucky, you have deposit liabilities for 2 years tenor. And you are looking to fund conservatively. What you've got to do is that you do a maximum of 10-year mortgage. So this manager that could have easily been able to afford a 20-year mortgage can't afford to own a home, because you have to benchmark and try to force him to a 5-year or a 10-year mortgage. Secondly, is also that the interest rate at 25%. I tell people when they come to us that at 25% interest rate, if you're paying in 10 years and you just sit down, work with the Excel sheets, right? You'll find out that you've paid like 3 times of the amount you borrowed, even though if you provided 20, 30%. What the M refund would help us to do in that regard is the interest rate is going to be circa 12%. At 12%, just plug in that same figure that manager in a commercial bank, just the earnings and his ability to pay over 20 years, right? You'll see an immediate difference in the value. So 12% compared to 25%, right? Maybe in 20 years, you'll be paying about 1.5 of the amount you borrow, or maximum 2 multiples. So it's a major game changer for the borrower. In terms of for developers, we work with quite a lot of developers, and the problem you come across is that when they come to you, you say, where are the list of the off-takers, right? And what you end up having is that quite a number of times, the developer has to go and structure and cook up off-takers. But by the time you go into the project, the off-takers are not available. But with the MRE fund, right, there's something they call the off-taker guarantee. That means you're a developer, you are going into a project, right? MRIF, working with MOFI and working with ARM, will be providing a guarantee for you. With that guarantee, you can go to a commercial bank or go to a mortgage bank. You are able, so that issue of where your off-takers, that issue is addressed. You are able to get construction finance, which you could deploy into the project. But also is that when you do pricing for construction finance or for mortgages, what you're also pricing is risk, right? With the HEMRE fund, that means we can price a reduced risk into the facility you are granting to either the developer or whoever is involved in construction. So it helps for the off-taker, for even the mortgage banks, and even the developer. Another interesting bit for the MRIF is also ability to attract investors into the sector. What the banks have found a way to do is that it's almost like a platform where you have individual depositors, right? Bringing in money, but that fund is usually for a 1-year, 2-year period, like I previously mentioned. With the MRIF fund, there was an initial 150 billion naira raise that was provided by MOFI. There's a second raise, which is 100 billion, which gave the opportunity for private investors, for PFAs and other institutions to participate. So even as an investor, right, you are having almost a securitized avenue for you to also invest in the real estate market.
Thank you. Thank you very much. I think the MRIF is a good initiative. I would like to ask you, Mr. Deji, apart from all of the wonderful things Mr. Adeomi has mentioned, are there anything you'd like to add to the MRIF initiative?
So, sounds like you asked me a simple question, but it's not as simple, it's not as straightforward. So I'll address it in terms of demand supply. I'll also address it in terms of what I think will happen in the short term and what will happen in the medium term. I grew up from middle income family, all right? And my father's home was on Adeno Ogusanya. And it was back in the days when ensuite was not even in our lexicon, you know. The joy was in the family, the children, scrambling to get into the bathroom, one before the other. So on the demand side, I think the first advice I would give to people is to be reasonable and be realistic. If it's your first time home, if you're buying a home for the first time, don't ask for bells and whistles, you know. Just get onto the property market. Because once you do, you benefit from the rise. So that's important. I think MRIF, as I've said, is revolutionary, but the growth will not be as we imagined it would be, just because, as I said, we're all poorer, all right? And therefore, many of us who ordinarily would want to get onto that bandwagon will not be able to do so. And what's the advice? I would say joint ownership is very important. Husband and wife should get together. Just make sure you access it so that you can benefit from that. I think it's a very good way for people to benefit from the market. The third thing I would say is that, and I'm betting here, and I'm wearing my asset manager hat, is that the issue of fractional ownership as a product from asset managers may fuel this market. I think it's going to come. I think, if I was CEO of an asset management company today, I'll be looking at that space. All right. And if you look at the diaspora remittances that we talk about, and it's not fiction, it's true. I mean, consistently, Nigeria has raised over 20-something billion every year. So, with what we have said about the income gap that has arisen on the back of global inflation and building material cost increases, fractional ownership of homes is a more effective way for you to, because you don't have all the money, and I'm not talking about unit trust, just the tokenization of real estate. I think it's probably a space that will take off. And if that takes off, I expect it to fill the gap that will result from an MRIF product simply because people just don't have the means of doing it. So I think this space is likely to be a very interesting one going forward.
Thank you so much, Mr. Ali. Thank you. Mr. Oduaya, speaking of fractional ownership and I think we've talked a lot about the MRF. So I'm asking, are there more innovative financing models? And I know, including fractional ownership, rent to own, and all of that, to drive home ownership and access to real estate?
So the short answer is yes. There are interesting and creative ways in which real estate can be financed. We have to remember that the real estate or housing market is a market. So you have several players in that market. And there are several reasons why people own real estate or participate in the real estate market. I know a lot of the discussion today has been on home ownership, but there's nowhere in the world where 100% of the population own homes. I don't think that is the objective. Home ownership itself comes with its own gains and cons. But having said that, there are different ways in which different players in the market can finance or can participate in the real estate market. So for instance, let's talk about home ownership. Collective investment is a way in which homes can be owned. And so many companies in the past used to encourage their employees to get into cooperatives. And the oil and gas industry has done it very well. The conglomerates have done it very well. The Cadburys, the UACs of this world. You know, and I'll tell you a story about some years in the UAC, they found out that a lot of their drivers already own their own homes. And people kept wondering, you know, if the driver can own his own home, and the managers were unable to own homes, how were they able to do it? And what they did was that they came together, and every month they put something in the fund, and one by one they built for each of their members. So there's strength in people coming together, collaborating, and pooling funds. It can be done on individual levels, it can be done on corporate levels, it can be done on even an institutional level as well. So that's an area in which I think a lot of emphasis can be placed on. And technology can do it easily for you, you know, these days with crowdfunding and so many other things that's happening around the world. That way, the velocity of home ownership can be increased because you are pooling resources and not just relying on your individual income. Mr. Dijale has talked about a couple coming together. That should go without saying. I mean, we are all going to live in this house together anyway. So we better pool our resources to own. And most mortgage institutions allow that. They allow household income as opposed to your individual income. Beyond that, a lot of people want to participate in the real estate market as investors. But because it's so capital intensive, you just don't want to bother. If you don't have 100 million, 150 million, 50 million, you just take your money and put it in money market or something else if you must invest. But having fractional ownership, having unitization, and investing in vehicles like the REIT can really expand the bracket of those that can participate in this market and pool funds from other sources into real estate. So for instance, UPDC has a REIT where individuals can go today. If you have 10,000 naira, if you have 20,000 naira, if you have 50,000 naira, you can start. So students, young workers, young adults can begin to get exposure to real estate because it's a viable investment asset class. And all we just have to do is pool resources from all sources, given the attractiveness of real estate and its unique attributes in funding and financing real estate. Also, I mean, PENCOM has done something in the last few years to allow people to use 25% of their retirement savings accounts as equity in real estate. That is a huge opportunity for those that have money in their RSA accounts. It's a way of financing real estate also. If you combine that with what MRIF is doing, one of the major challenges with the credit industry for real estate is that coming up with that 25% is in itself a barrier that a lot of people cannot even cross. Forget the interest rate. The interest rate can be zero. Just coming up with your 25%, given the current cost of construction, is a huge hurdle that a lot of people may not be able to cross. So being able to use your RSC account that you hitherto may not have been able to access until you were 50 and older, at 20, at 30, at 35, at 40, you can get access to that. Stay in your own home, reduce your own cost, and improve your life. Thank you.
Thank you so much. Are we clapping? Yes, please, go ahead.
Okay. And thank you so much. Based on my experience, right? Also, like Mr. Dijali has said, there has to be a local solution for our problem. And I just cast my mind back to when my father built his first house. All he did was he bought a land, and in about 3 months, the value of the land doubled because there was a problem. There was a flooding incident that happened in Lekki, you know. And what he did was he sold off half of the plot and diverted the money to build the house he currently stays in. I met a developer in Kwara State, and when he came to see us, he said, I've helped about 5,000 people to own personal homes. I said, this is impossible. We're going to come to Ilorin to go see you. And seeing what the guy does just made me cast my mind back to my own experience growing up, right? And which I'm sure it's the same for 90% of Nigerians, right? What you do is you buy the land and you develop. As you make money, you develop, which is what Mr. Odoanya was referring to when he says the drivers already owning homes, right? I think we also need to rethink home ownership beyond physical brick and mortar houses already existing. What we've done and what you've started to see a lot of mortgage banks and commercial banks do is that you identify a developer, you identify an area, right? You support them to provide infrastructure. And you have people that come in to buy 1 plot of land, 2 plots of land, right? Initially, they don't have the funds to complete that house. There is already estate rules, standards of what you should build. But by the time you get there, 3-4 years time, the house is already standing. For that guy in Ilorin, he has a system where almost like the Ajo and going around to collect daily contributions from market women, from vulcanizers, from mechanics, right? And in about 3-4 years, they already own the homes. MRIF, the federal government, the financial institutions would probably not be able to get to that tier of the income earners, right? While we solve the problems for the middle income earners, I think that is a structure that would also work to help address those guys at the lower tier.
Thank you so much. That was some beautiful insight. Speaking of rethinking, Mr. Ali, I'm going to ask you a 2-in-1 question. And I'm asking, speaking of rethinking, how do you see the market evolving in the next 5 years? And then what trends do you see reshaping the real estate economy? What are the untapped opportunities? And what do you believe investors and developers are overlooking right now and in the next 5 years?
All right. First of all, I don't think there's anything I know that any other developer doesn't. Honestly, it's not such a complicated industry. I think what is not uniform across the board is courage, your execution capability, your proximity to capital, and whether or not you have a solid brand. That's what makes the difference. All right. So we all know the direction. We all know that the critical mass has to be served. We all know that the risk is a lot lower, and our ability to execute will depend on a combination of those strengths. I think, as I've used the example of the motor vehicle industry, that even though MRIF has come at a very good time, we would not be able to benefit from it maximally just because we're not as wealthy as we were just about 24 months ago. And I think that that gap in the short term will be plugged by non-bank financial institutions who bring, various products to deploy capital. I think I see that as a big possibility in the short term. But we also need to understand that MRIF is not the end, it's only the beginning. And there are many other features that will be built around MRIF. I mean, we haven't started talking about, I know a number of institutions have experimented with it with varying degrees of success, but rent to own is also something that somebody needs to crack You know, nobody has been successful. We try to do it. It's a very tough product. You know, it's a sort of sense. You think people will embrace it, but we have been surprised by the low uptake of that product. You know, so but I think MRIF itself is the engine that will fuel that growth in that whole space. You know, so that's what I would say to your question.
Thank you so much. Speaking of trends and in the next trends and what we see in the next 5 years, Mr. Ojo, I'm coming to you, and my question is that green buildings. I know that there's a lot of, and I know that right now in Nigeria we're speaking about affordable housing and all of that, and in the same breath I'm speaking about green buildings and all of that. But green buildings, do you see it as being financially viable? Are Nigerians even open to the idea of green building? Is it financially viable, or does it still remain a luxury? What incentives would make sustainable development more attractive to investors and off-takers alike?
All right, thanks for the question. So, green buildings is almost like a buzzword now. Everyone is talking about it. You know, I'm not a very big fan of fads. They sound very gimmicky, and you are just talking about it because everybody else is talking about it. So, my view is this. There's a huge opportunity for sustainable development. And I would approach the question from a sustainability point of view. Sustainability, I think, is a very wide subject, and I think it is the way to go for many good reasons. Apart from its impact on climate change and the need to participate in making this planet a better place for ourselves, our children, and our children's children, it also makes a lot of commercial sense. And it need not be expensive. I think when everyone is talking about sustainable development, they quickly rush to the gimmicks, solar panels, dual flush toilets, infrared, and all sorts of fantastic ideas that may or may not be suitable for what we are talking about. In the sphere of sustainability, generally, there are very simple things that can be done that don't necessarily cost money. For instance, there are passive and active sustainability strategies. Passive ones can start from as simple as how you design your buildings, taking advantage of the climate in terms of the wind direction, in terms of the solar gain, and in terms of whether or not you want to use technology or power all the time. For instance, let's take this building. This building has an atrium and there's light coming in. You don't need to put on all the lights. In fact, if you have all these lights coming on, you're just wasting power for no reason because there's no need for it. It doesn't cost you anything. It just means you've thought about it ahead of time. Our climate is such that you probably don't even need to use air conditioning for about 50% time of the year. But because of the way our buildings have been designed, you need to put on your air conditioning because there are no windows, or the windows are such that you can't open them for noise, for dust, and so many other things. So having overhangs, having solar shades, and a lot of things that don't necessarily cost you more than the building costs can add sustainable credentials to your buildings big time. How you use water, you know, is a huge subject. In those days where we were growing up, people were using a lot of rainwater to do a lot of things. You know, you put your buckets under the roof, and then you get the water, you use it to wash and all that. That is crude. But there are technologies for rainwater collection, and put it into a tank. Just think about it ahead of time, put it into your design, and you can use that water to wash your cars and do any other thing, other than going through the filtration process, spending money on chlorine and so many other things that cost money. So sustainability can be inexpensive and can also be expensive if all you are doing is just throwing technology at it and looking at solar panels and other things. I'm not saying those are not good, but I'm saying that especially for bringing down the cost of buildings and also trying to be sustainable, there are many, many things that can be done. And there can be a whole program just to focus on that. Things like labor, where you source your labor from, where you source your materials from, and how you transport them to site, and the impact on CO2, and so on, and so on, and so on. If you train local people and use them, and you don't have to transport themselves from far distances, you are also adding to sustainability. And the material that you use, if you use made in Nigeria versus things coming from China and shipping down and running a lot of kilometers in transportation costs, you're also contributing to that. So we can all do a lot in this subject. Beyond that, sustainability has also meant that large-scale developers like ourselves at UPDC can source green funds. For instance, there are many funds around the world that focus on sustainability. I know the likes of people at IFC with EDGE and so many other things that they're doing can help you get financing at very reasonable and decent rates, just because you are pushing the agenda of sustainability, because it's an objective that we all have to. Otherwise, you keep having flooding, you keep having all these environmental problems that we all don't want. Thank you.
Thank you so much, Mr. Ojo. Thank you. I think we're running out of time, so I will ask you my last questions, and I'll start with you, Mr. Adeomi. So as our take-home, what policy change or intervention would you advocate for to improve mortgage banking services?
Okay, from the perspective of a mortgage bank, we've had consistent issues around land use and the current Land Use Act. Foreclosure is a major issue. So in terms of policy changes, right, we need to further enhance the foreclosure law that we have in place. Lagos has done a lot on it, right? But you will find a lot of the mortgage banks, they will tell you, I don't do projects outside Lagos, Ogun, Rivers State, Abuja. And it's just because the ease of foreclosing is a major challenge. Also is that in terms of policies, right, it will help the mortgage banks and even the commercial banks if the government, just working with the private sector, further develop the securitization mechanism that we have in place. We have NMRC, which is doing a fantastic job, but I think a lot still needs to be done beyond the NMRC, because what that enables you to do is that if you can easily refinance the mortgages you've created, you get liquidity, you go back to create further mortgages.
Thank you, Mr. Adeomi. I'm coming to you, Mr. Ojo, and I think my take-home question for you is, what are the untapped opportunities in Nigeria's peri-urban areas for developers willing to take long-term bets?
So I think by necessity, developers need to start looking at the peri-urban areas. The land values in city centers have become so high that any developer that wants to survive in the long term should start looking at the outskirts very seriously, especially in places like Lagos. I mean, some people are already talking about Banana Island at 3 million naira per square meter for land. I don't know how true that is. Is it true? And Lekki Phase 1 being at 1 million naira per square meter and above, there's a limit to how much development that can sustain, just because, as Mr. Dejale has said, we are all poor people, no matter how you look at it. The income levels are very low. And the challenge with affordability, primarily, because everyone thinks that you can throw money at this problem. You can't. You can't throw money at this problem. 250 billion, 1 trillion. You can't throw money at it. the challenge is that the income levels are low. The income levels are very low. Minimum income at 70,000 buys you nothing when you talk about real estate. So the fundamental issue with this whole structure, and I like that Mr. Ali keeps saying that it's not a silver bullet that's going to cure all our problems. The fundamental thing is that income levels are low, no matter how you look at it. Even to pay back the principal in 30 years, forget the interest, at 100K per month is impossible. It's impossible. It's an arithmetic problem. It's not even a mathematical issue. So there's got to be, and these people still need to live somewhere. You know, these are people that need to be housed. These are people that have, I mean, they are the bottom of the pyramid. Other than encouraging subsidies that is open to abuse, we need to find ways in which those people, and as you go higher in the pyramid, can be housed. So that is the sustainable business model in our view, that you need to start looking at the peri-urban areas. The challenge with the peri-urban areas is infrastructure and transportation links. They are sometimes too far away from where people work. And that's why slums develop close to city centers, because people need to come to work. They need to resume by 7, they need to resume by 8. If you are living too far away, you just can't make it. It doesn't matter whether you like the place or not. It's not practical. So there's got to be improvement in transportation links. I'm glad to hear that what Lagos State is doing around the green line and the blue line and the red line and so on. That would encourage developers to move into these locations. Having multi-nodal city developments. So what's happening in the Lekki Free Zone, for instance, is creating its own economy around the seaport and Dangote refinery and so on. What's happening around Agbara and what's happening around, you know, so we need several places where people can work and then create a community around where they work. And so giving some of those catalysts, especially infrastructure and transportation connectivity, peri-urban areas can be a huge, viable, sustainable business model for developers in the future. Thank you.
Thank you so much, Mr. Ocho. Thank you. That's well said. Yes, Mr. Ali, my take home for you is going to be a similar question. And given that Mixta already builds community, like you already mentioned, you're passionate about affordable housing. I want to hear your take on developing peri-urban areas and how you see for developers, both small scale and large scale developers.
The first part of your question?
Your take on peri-urban areas, given that you also build communities. And Mr. Ojo had said that we need to build communities in all of these peri-urban areas, develop these areas, infrastructure and all of that, so that, you know, it aids.
Yeah. So, I was asked a similar question some time back, and I tried to use how a city like Lagos has grown. 50 years ago, maybe 750,000 people, when London was about 9 million. And today, maybe London is about 12 million, and we have moved to 20 million. And we haven't really developed new neighborhoods. You know, we're just building around what has been done, although there have been attempts. Now, our view really is that it's safer and easier to move outside of the CBD and do what appears to be more difficult, which is to build your own community. You know, and if we're not so sure about the viability of that idea or proposition, I think we've been proven right, given what we've done 35 kilometers away. I mean, bear in mind that, as I said, 10 years ago, nobody would go that far, you know, and we've sold thousands of homes and plots in that whole neighborhood. So I think it's something that we have no choice but to do as developers. The challenge is finding a safe way to do it without going bankrupt yourself. You understand? and it's a big, and I will be the first to admit that it is not easy to do what we do. You know, you have to be crazy to take on that sort of risk. You know, but I think that because I'm an optimist, I think that inevitably Nigeria will make it. Um, whether we like it or not, we will by default make progress because we have started doing things that we've been stubborn about for several decades. And the way we know is that we're feeling the pain. You know, so there is no problem we have in Nigeria today that you can't trace back to 50, 40, 30, 20 years ago. You know, so it's all come together. And so I think New Neighborhood is, as a firm, what we believe is a solution, but we don't have all the answers in terms of how to do it safely, you know. But we'll continue in that regard, you know. So I think I'll just leave it at that.
Yes, thank you and well done. Thank you to all of my speakers who would be taking the question. Thank you. Yes, we'll be taking the questions from the audience right about now. And please ask your question, and you may indicate the speaker you would like to answer your question. Otherwise, I would choose the speaker for myself. Okay, we have hands raised.
Thank you very much and good afternoon. My name is Kunle Adibajo. I'm the CEO of Arab. It's been a very, very beautiful, enlightening discussion. Because we're looking at what's next, I just want to ask if any of the panelists have any views as to how we should be constructing. What should we be expecting? Because Mr. D.G. Ali talked about avoiding ego, avoiding bells and whistles. And I think something drastic has to be done. Mr. Ojo also mentioned that the income is low. So should there not be some more innovative ways of delivering that product? Should we change our views on exactly what standard that product is? Because maybe, again quoting what Mr. D.G. Ali said, we aren't that rich. Thank you.
Thank you. Mr. Ojo, do you want to take that?
Yes, I'll take it.
Thank you.
So it's a combination of factors. One factor is they say that if all you have is a hammer, then every problem is a nail. So the issue with building construction and the building construction industry in Nigeria is that you need people to be able to deliver those buildings. And over time, different developers have tried to introduce different methods into the market. Remember, HFP came with prefabrication, and it just didn't really catch on. Part of it is the lack of expertise. Okay, we have artisans that have been trained over the years on how to mold blocks, on how to build with blocks. If you introduce a different technology, you need to train them. You need to have a pipeline of expertise to be able to deliver. So perhaps what we need to start doing is to start looking at training, from the artisans, from everyone who needs to be in the value chain of delivering a different type of modes of buildings to be able to deliver them in the future. Especially, all over the world, people see housing, especially affordable housing, low-cost housing, as a factory-style endeavor. So you just have modular systems, you have prefabrications, and you can do thousands of houses as such. That will reduce the cost, But the problem with building very quickly is that if the offtake does not match your speed of delivery, you are just going to go bankrupt trying to do that. So that's the first part. The second part, I believe, is cultural also, and we need to start educating ourselves around accepting, opening our minds to a different form of living. And I think the younger generation, the Gen Zs and co, have started to catch on that because people are now very used to smart homes. Okay, they prioritize quality over quantity. So building very smart homes, smaller footprints, very simple designs, straight walls, no curves, and so on and so forth. All those things contribute into the cost of construction. And finally, is around changing our minds. I think events like this are also very good at disseminating information and letting people understand that there are different ways in which this same thing can be done. Why do we always rush to concrete? Why do we always use concrete all the time? In many parts of the world, there are plasterboard, there are different other things that can be used that make your houses lighter, and they still provide the same kind of comfort. So it's a combination of lack of the skills in the marketplace to deliver a different type of housing stock, and also our cultural and our attitudes and our beliefs around how to change the way we live. Thank you.
Good morning, everybody. Thank you, SARS, it's been very insightful. My name is Ayo Gidon. I work with CESO Global, and we are more focused on the diaspora market. By virtue of that, we attend a lot of events and sponsor a lot of events abroad and all. So there are questions that come. You understand? A lot of people in the diaspora want to buy properties in Nigeria, and it's a good thing that Mr. Dejali still mentioned about the remittance, part of the economy. It's a huge part of it. So, it's something that would also keep improving the economy. But the questions that they keep asking is, okay, so I can afford 2,000 euros per month, contribution and all that. Can you find me a developer that all I have to do is pay 1,000 to 2,000 euros or pounds or dollars per month, and I'll be able to key into something good here? So these questions come up a lot. But then you go to developers, that's what I'm saying. Okay, so this question applies to both developers and finance houses now. But we are not able to work with anybody based on that plan. And it's as far as I'm concerned, it's a good plan. You understand? Somebody can give you 2,000 euros on a consistent basis every month, guaranteed. In Ghana, all we have to do in Ghana is just the $500 per qualification for either US, Canada, or the UK. And these people qualify for diaspora mortgage in Ghana or even in Liberia, and they start once they qualify. But you come to even Fidelity, EcoBank could do it in Ghana, but bring it back to Nigeria, it's a problem. You understand? So how can we bridge this gap? People in the diaspora want to engage. They have first of all, the 25% is an issue, and then but they have the monthly contribution ready. Thank you.
Mr. Adeomi, do you want to take that?
For the question. We get to speak to a lot of sales guys that work with people in the diaspora market, and the problem you mentioned exists. But the main challenge is actually the cost of funds, right? And you have developers that come to us and come to sit with us to say, oh, I have this large pool of diaspora market, right? And I need funding to be able to take them. They will repay over 5 to 10 years, right? But by the time you sit down and you just plug in the numbers, right, it stops to make sense. Not for us, because interest rate is the interest rate, right? But by the time they go back to the guys in the diaspora market. The guy starts comparing. If I'm taking a facility here, I'm taking it for 20 years. I'm paying at there about 5%, right? You're telling me I'll be paying $1,000, $2,000 per month, right? In 5 years or in 10 years, I've paid times 3. So that problem exists. One way that I think we can all jointly crack it is also to find a way of crashing the cost of build, right? So that they can easily or comfortably absorb what the final cost of the build will be. Another challenge with that model is also the instability of our exchange rate, which in this case have worked in favor of if you're abroad and you're sending in money, because if you're pricing there about 2021, it's 350 naira per dollar. Now it's 1,500, right? But there's also a possibility that it will move against them at a point in time. So what we tell them is that at least consistently, Naira has continued to lose value, right? The way I think you can mitigate, rather than you telling us that you will be sending in pounds and we've priced your property in pounds, right? I think in 2-3 years' time, if you plug into this product, right, there's an opportunity that the house has significantly appreciated in value. Your so-called 1,000 pounds per month, 2,000 pounds per month, if you model it, it would have taken you 10 years. But in this case, because of just the devaluation, it will take lesser period. Beyond that, I don't see a solution readily in the market to address it until our interest rates come down, right? Until we are not fully dependent on importation of materials for builds, where almost everything is manufactured in the local market.
No, I don't. What I would say is that there is an opportunity there, but I think the scenario is a case of the product not fully formed, and therefore needs an intermediating entity, which is a financial institution. You see, the business of the developer is hard enough. So to complicate it with a product that doesn't offer that capital to manage risk just is a disincentive. But I do think that there is a market and there is a product. The two just have to come together. So rather than direct that question to the developers, I think it ought to go to people like to come up with a product that allows you to bridge that gap. But clearly, there's an opportunity there because the remittances coming into Nigeria is just too large for that space to be ignored.
Yeah. Good afternoon, everyone, and thank you to the panelists for the questions and how they've addressed the topic. So my name is Tulilokwe Oshunshina from United Capital PLC. What we do is raising financing for projects, and real estate is one sector that we very much play in. But one thing I've realized over the course of the project that we've tried to raise financing for is that investors are usually wary about financing real estate projects, and this is because they really do not want to take the construction risk. So most times they like the project generating cash flow before they come in, and that is why they usually ask for so many documents, which include documents around off-plan sales, anchor tenants, and so many others. So my question is, in your past projects, how have you been able to navigate this, your capital raising approach to finance the past projects that you've developed? Thank you.
Thank you. Mr. Ali, please take that. Thank you, sir.
I think it's one of the things I tried to reference when I spoke earlier on. The funding structure that we have as a firm has evolved. There have been times when it wasn't the most desirable for the kind of business that we do. Because we're a large-scale developer as well, the kind of piecemeal inflows from subscribers does not allow us to deliver on our mandates. So the benevolence of our principal, ARM, has allowed us to manage that. But you also have to recognize that if you shoulder the weight of the world, you will buckle yourself, you know. So we've had to complement that with other sources of funding. We have used as unsuitable a capital as commercial paper, which we had to get out of after a while because it's just not something we needed to do. But was something that looked very attractive during COVID when interest was went to about 4% and you could borrow. You know, so the capital structure for real estate companies is not as efficient as it should be. Risk capital is not readily available, which is what you need. And for as long as that is a limitation, it limits your ability to do large-scale projects such as the ones that we're doing. You know, so it's a case of continuing to look for ways to improve on the capital structure. But the solution isn't fully there yet today. So it's quite challenging.
Thank you so much, sir. I think we'll take one more question because of my speaker's time. I know that a lot of people have a lot of questions, but I think we only have time for one more. Yes.
Good afternoon, everyone. Thank you very much to the panelists and the moderator as well as the solicitors for this insightful event. I am Ogra Reginald. I recently completed the Bar Part 2 program at Nigerian Law School. So my question, I will direct the question to Mr. Wadewumi. He mentioned earlier about that when he was in South Africa, there was the issue, the idea of mortgaging in African youths was a bit more pronounced than what we have in Nigeria. So my question is, what method or what are the mechanisms that the real estate sector is putting in place to incorporate urban-rural drift? Because you see that the whole housing issues, it's something that is only peculiar to maybe Lagos and to an extent Abuja. You hardly hear about lots of housing schemes, particularly in Uyo and Port Harcourt, where I previously lived. It's more of a Lagos and Abuja thing. So what are the mechanisms in place to incorporate the urban-rural drift in order to give a wider range or wider reach to Nigerians? Thank you very much.
Hello.
Thank you. Thanks for your question. I think the main challenge, has been reiterated, is infrastructure, right? The population of people residing in the urban area in Nigeria today is about 50%. I think there about 1960 was about 12%. A combination of two things have happened. You've had people migrate to the urban areas. You've also seen development move to the so-called places you will call the rural areas in those days. So infrastructure pretty much is one. And just take, for example, in Ikorodu, you're staying in Ikorodu, and you work in VI. I was taken to a place further down Lekki, I can't remember the exact spot. And from that point, you were looking at Ikorodu just ahead. What you needed to do really is to probably put a bridge there, people cross over. It would have even served as a means of exercise because just looking at it, it would probably take about 20 minutes for you to walk just across. So you have a car park on both ends. When such things happen, right, the pressure you have on people wanting to stay in Lekki, wanting to stay in Ikoyi, that pressure is pretty much reduced. If you want to get a place in Lekki Phase 1 today, it's upwards of 12 million naira for two-bedroom apartment. Until that infrastructure problem is sorted, right, we will continue to have that pressure because you would not want to go to stay in Badon. But with a good rail system, it's actually possible for you to work in Ibadan, to work in Lagos, and live in Ibadan and go to Ibadan pretty much every day. If you go to the UK, you have people staying as far away as Bristol that have to come to central London 3 times a week. You have people staying, when I was doing my internship. If you have those solutions, right? Maybe I'll move to Emowe, for example, build my big house in Mowe and transit to work under 20, 30 minutes. The case in point you referred to in South Africa, interest rate as at that time was 20% for mortgages in Nigeria. In South Africa, as at that time, was about 20%. It was about 2%. So it's very easy for an entry level second year into his employment, being able to access the mortgage, because at that point you can take it 25, 30 years, because they would have said, oh, this guy has about 28 years to work. You can get that bit. So also until that interest rate problem is fixed, we will continue to have that pressure. I remember 2008, I got a place in Yaba, and I had to pay 350,000 naira. 2008, I think I was in my second or third year in KPMG. My salary in KPMG was 3 million naira. A developer took me to somewhere, and it was a 3-bedroom apartment. A developer took me to somewhere in Yaba, and he said the studio apartment is renting for 4.5 million naira. How many graduate trainees earn 4.5? As at that time, 350s. That means I was, even at 2.8, I was earning about 8 multiples of what I'm paying for rent, right? At this point, you pay a graduate trainee about 5-6 million naira. 90% cannot serve that cost. But once that pressure is eased by infrastructure, and there is a lower cost of funding, which MRIF is also assisting to provide, you will start to see the easing of the pressure you are actually seeing on the real estate, especially in the central Lagos area. Thank you.
Thank you so much. I hear that we have online questions from our online participants. So can you display them and read them out? Okay, please read.
Okay, so the first one says, I recall Mr. Deji Ali mentioning a new government initiative aimed at addressing housing and mortgage gaps in Nigeria. Could you provide more insights into this initiative? I'm not certain of the name. I believe this is the Murphy Real Estate Investment Fund that you mentioned, sir. So the participant is asking, additionally, how can this product be accessed?
So first of all, that's something that can be looked up. I mean, information is generally available. But I think what government has done is to make mortgages affordable. And the current ceiling on that is about 12% for up to 20 years. Now, in terms of how it can be accessed, all you need to do is go through.
Okay, I think so first of all, there are already listed developers, right? What you need to do is to identify those developers, look at the products they have, look at what suits your need and your pocket. In your pocket, in this case, being your salary or guaranteed income. Then the next thing, you either approach a PNB or a commercial bank, and you apply. You apply for it. If you meet the qualification criteria, definitely it will be advanced to you. So your developers, listed developers, the information is available on MRIF's website. It's also available on ARF website. If you talk to any of the mortgage banks, they also have the full information. So look for the developer. Secondly, assess the house. If it meets your criteria, then you can talk to any of the PMBs or the participating commercial banks.
Thank you so much. Thank you all so much. This brings us to the end of the panel session. I want to appreciate my speakers for taking out time and for all of the wonderful gems that they've dropped today. Thank you all so much. Okay, yes. Now we'll do pictures.
Hello.
Let me call on my lead partner, Mr. Jemide, to please join the picture session.
Okay. Okay, while the photo session is going on, please settle down. Please settle down. The event is not over yet. Thank you, everyone, for taking our time to be here this morning. We really appreciate your time and your presence here. Don't be quick to leave. We have beautiful people and bright minds in the room. Please network. And we have light refreshments in the room to my right. Please make your way to the room to my right for refreshments. Thank you very much.